Gold prices are about to plummet. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, we're going to make the case of why gold prices are about to plummet by $1,000 an ounce as a rare triple top chart pattern shows not only an intermediate term reversal for gold, but a major reversal is coming. We're also going to take a look at where we think the market's about to break out. We'll identify those sectors, take a look at the charts and the momentum screens. We're also going to follow up on some of our picks over the last couple weeks, and of course, as we do every Sunday, show you how the machines are positioned in the market. And now let's head over to Goldman, where we take a look at how the machines, or what are called CTAs, Commodity Trading Association, which is a term used for these machines that literally trade off of price levels. And what Goldman is now telling us is that buyers are officially out of ammo and an uptape, at least from the machine's perspective, and open to large asymmetric skew to the downside if the markets were to sell off. So what I want you to understand here is the machines, and we'll look at the charts here. We're going to show you the machines have bought up to a certain level, and this is tends to what they do. They tend to move the market up and then let everyone come in after. That's their game. We're seeing them do that right now. Let's take a look at what Goldman's looking at over the next week in a flat tape, meaning if stocks just go sideways. We're looking at only $5.7 billion to buy in global equities, $4.5 billion on the S&P. And uptape, look at this, only $7.1 billion to buy. If the market goes down, they start to be bigger sellers, not huge sellers, at $36.2 billion across global equities. But look at the 1 month flat tape, $100 million to buy. That's virtually nothing. Uptape over a month, $11 billion to buy, nothing. But in a down tape, $222 billion of global equities to sell. That is a big move. Now, what is coming? Do you know what's going to happen this Friday? Well, that is when most of the corporate share buyback blackout windows start to end. That means we're going to see a lot of these tech companies come back into the market. We've known that they've made big authorizations over this last year to buy back their stock. So far, they haven't met those numbers. The question will remain is, will we see them do that in the quarter to come or not? Let's take a look at how these machines now from a visual point are positioned. And again, remember they were way down here on this is a rolling 10-day change in global CTA positioning on the equity side. And now look up there, that string position, they're looking for the market to take things higher. And here you can see, virtually this is looking at kind of that graphical version of how they're going to be buying over the next month. And you can see there are two cases where they become big sellers, but overall they're fairly flat now. Again, waiting for the market to do its point. So let's take a look at the CTA positioning. It's very tight now. You're seeing 4,050 to 150 to buy in the S&P, 4,140 to sell. So they're really tight here. But keep in mind, this data here we're looking at some from Goldman and TD Securities. They're not big sellers at these levels. They're just moving some micro moves here. But keep in mind, they're all positioned now. They're bought in. They're just waiting for the market to move higher. And let's make the case and see, do we think the S&P 500 and the NASDAQ 100 can move higher? Well, the case is, yes, we can. Let's take a look at the momentum screen. So we see momentum positive on the S&P 500. RSI is at 60. Now, if you're new to the show, the relative strength indicator, we want it over 40 to show positive momentum. The MACD, the moving average convergence divergence strategy, well, it's got a positive cross. We want to see that too. Our own proprietary report, Momentum Timer Pro, which looks at a bunch of these signals, smooths them all out, gives you buy signals based on multiple time scales. The daily, the 1 month, 3 month, and 6 month has 23 consecutive daily buy signals. That's the one on the bottom here. We see we made a signal on March 30th, buy it open at 404. Friday's closing, so we're up at 412. I'm going to show you the next upside target at 429, downside target at 396. Keep in mind that Momentum Timer Pro here is $60 with a coupon. Link in the description below. So if you're looking for something to help you kind of smooth out your trading so you're not reacting, it's a great report for that. Now above that, we have our version of these CTAs where I've taken the models that the CTAs used to trade and I've added a historical overlay. So they're telling us they're 100% long across a fast and a slow algorithm. This report is currently $30 a month. You got to get it before it goes to 40. Price is going up soon. Link in the description below. So let's take a look here at the SPY S&P 500, largest traded ETF. And what do we see? We've been talking about this neckline and the potential breakout here. Now, what I want to do is zoom in a little bit because this gets pretty obvious. You have your left shoulder, your head head, a one right shoulder, a second right shoulder. And what do you think, what do you see is happening here is you see these moves down, and then you see a higher high off or higher low off of that point, and then another higher low, and it's springing up. But if we zoom in a little bit here, because I want you to see that as it hits this kind of band of resistance, notably you see the volume kind of pick up following that selling move down. Look at the next time. The volume is not that strong here, as relatively speaking. How about the next move? The volume picks up a little bit on that down move. How about this move? Hardly any volume selling down here. And what do we see at this? Even less and less volume. So what is that telling you here is that the sellers are getting exhausted. We're running out of them. And that's the idea, is you want to see in a breakout higher is the buyers just overwhelm the sellers and take things higher. And again, this is all a factor as we look at the corporate share buyback blackout window starting to come to an end on Friday. Here's your breakout, move higher. The initial move 429 gets you to resistance from here, but you've got an easy case that this thing can get all the way back up to the 450s. Look at your downside move, the volume profile here on this 2-year chart. There's your downside looking at some sort of protection, if you will, where all these buyers and sellers are at. Plus you've got the moving averages. So a lot of great signals there to look at to make the case the market goes higher. Now let's take a look quickly here at the tech stocks. What do we see? 28 consecutive daily buy signals on Momentum Timer Pro. We're up from our buy on March 30 signal, upside target 331. And notably, we see 100% long on our slow algorithm, where most of the machines are trading. There are some of them that trade very fast. We're 55% long. This is probably going to move up here in the days to follow. So this gave you that early signal. Momentum Timer Pro is telling you across the 1, 3, and 6 month window, this thing's been a buy. Let's take a look at the charts here. And what do we see? A similar picture. We're seeing right at the neckline. Again, this is looking to break out up here into the 340 range. Initial one, 332 is where this is headed. You've got your downside support at 295. So again, this is a beautiful setup again, that as the sellers, and you notice this, as we got up here, what happened? The volume is tapering off. The sellers just aren't that strong. So it won't take much of a move now to break out to the upside. And you can see it'll move between these supply zones. You notice how fast price moves between here. That's because there's not a lot of buyers and sellers there. The next round of sellers is up here in this 340 to roughly 350 range. All right, let's take a look now at the bond market, because here's another place we see a breakout going. If you're a 60-40 portfolio, man, you got to love what you're seeing here. Potential break higher in equities, potential move higher in bonds happening at the same time. But of course, Goldman notes that in positioning here over this next week, there are going to be slight sellers. And if there isn't a move higher in bond prices, well, then there's going to be selling on a flat market and a 1 standard deviation and 2 standard deviation move down. It needs to see a move higher in bonds for this really to kick in to take this trade higher. Keep in mind, we've just kept this on the signal, further buying under 3.3% on the 10-year. Of course, we just noted that we're going to see a little bit of selling likely on global bonds this coming week. But let's take a look at the screens here. We got momentum is currently negative. We have 7 consecutive daily sell signals on Momentum Timer Pro. But broadly speaking, the 1 month is showing a mid-sized signal on this. The 6 month or 3 month window is showing a minimum buy signal, as is the 6 month. So we're seeing some just still longer term signals are holding up. We noted last week we had downside target at 104.40. What are the odds on Friday? Close 104.40. We have a buy open on 320 at 106.88. We're still slightly down on this, but we think the upside is absolutely there. We'll note that the CTA here, Mimic, showing a bit of a short position here, kind of leading what Goldman is suggesting. The long end still holding up. We'll make the case why this still looks really good from TLT's perspective, because you see this big coiling pattern. So you have a bottom, another bottom, and now it's coiling and looking to make a move higher is what we're seeing. But let's zoom into this and look at from the volume perspective. You see here on this move down, as it's coiling inside this pattern here, you see some volume pick up a little bit on this move down. What do you see on this move down? Less volume happening. You see a big thrust of volume on this upside move, but notably these downside moves, you're starting to see less and less volume, telling you that the direction this is likely to go is to break out to the upside. It's got to get through this 6 month volume profile here at 106.45. It's got some downside move move here, but seems to be buyers keep stepping in. So we're making the case this is likely to head higher. The bigger move is up into the 116 level. After that, this thing starts to break out. And as we know, the bond market's been telling the Fed, hey, look, you're going to be cutting later this year, and not a little bit. You're going to be cutting a whole lot. Now, let's take a look at some of our recent trades that we've shown you on this channel. Let's first talk about the energy sector, XLE. We told you last week, tighten up your stops to 84.90. If you did that, you were stopped out on Thursday. So we're going to call this a closed out trade. You made a bit of money on that, so that was nice, depending on what you're positioning in. And that's just how easy, again, we did that whole trade based on CTA-Timer Pro. It's so easy to use, my friends, because it looks at a historical overlay. If you see a -100 and a -100 on both the fast and the slow algorithms, and I'll show you, that would be right here. If this were saying -100 across the board, then that tells you in historical positioning that these things are way oversold. Doesn't mean you should buy it. It means you should put it on your hot list, start looking at your signals. If you see this to move up, you should validate it and then look to run with it. If you like the other side of the market, if you like to short things, look for a +100 on both sides. It's telling you historically it's way out of whack, way overbought, and then you can play the reversal. But keep in mind, things that are overbought can continue to go higher, but these oversold signals, what CTA-Timer Pro does, are gold mine at $30 a month. Let's take a look at KBE, banking sector. We made the case this would be in a fairly high-risk trade. So, you wanted, if we didn't make it clear, trade this with stop losses, as you should do everything we talk about in general. RSI is at 43, so momentum slightly positive. MACD is turning higher. We'll look at that. Momentum Timer Pro jumped into the fray, 5 consecutive daily buy signals, and we put a buy at open on April 17th at 36.33. That trade is still up, and I think the upside target is the 50-day moving average. Let's make the case where this can go here, and then we'll get into gold. Let's take a look at KBE. Where is it? It's up here somewhere. Oh, down here. There it is. I missed it. There we go. So we had this big move down, and let's zoom in because we know the big volume was up here, but what's going on down below is you see it's sitting right above that 6-month volume profile line, adding a layer of support. You can see the RSI momentum building slowly to the upside, MACD confirming it. Again, I think there's a quick move up here at some point to the 50-day moving average. If you're trading this, you use a trailing stop, use some sort of stop, you get that move up there, get out of that trade once it happens. Now let's talk about gold. Because right now we're looking at buying over 2,000 ounce from the machine perspective, selling below 1950. So what you need to understand here is the machines aren't ready to turn yet, but they're getting very, very close. If gold doesn't rally, we're going to see their signals adjust, and probably into next week they become big sellers. But let's take a look at what's going on here. Because I want to talk. I pulled out the Bible of technical analysis, and I want to share this with you because many said, "No way, Steve. This." I saw the comments. He says this is going higher. Here we have it from the Bible of technical analysis. Multiple tops and bottoms, technical factors similar to those which produce double tops and bottoms may on occasion produce triple and sometimes even quadruple or quintuple formations having the same implications. The tops or bottoms in these multiple patterns are characteristically closer together than is the case with the double reversals, and it's perfectly logical that this should be so. If we may once again employ our comparison with an attacking army, we should naturally expect that a large number of unsuccessful assaults on an impregnable enemy position, even though each were delivered with comparatively little power and with little time taking for gathering. So what they're talking about here is when we look at the charts, and we're going to do that here in a moment, what you're seeing is assaults at this high level here. Everyone thinks that's bullish and going to break out higher, and what it's trying to tell you is, look, think of it as an army is trying to attack. They're getting rejected. They're getting rejected. I'm going to make the case of why this is about to drop about $1,000 an ounce. It'll consolidate and likely make a move lower. Let's look at the technical screens here, or momentum screens. Momentum has turned negative. The RSI is slowing down. So momentum slowing is down to 51. MACD's got a negative cross. Momentum Timer Pro has picked up a consecutive one sell signal on the daily. We say no position because we are not licensed to give people short advice. So we're just going to say look for a short opportunity. How you trade it is up to you. And if you don't feel comfortable doing that, then please don't. Next upside targets, the recent all-time highs. Downside target at 179.50, and look at our CTA positioning. It's been down to 39.5% long. Now, if you had the report, you would have seen this move before. And what is it trying to tell you here is, look, if you have a gain here, either take some off the table or tighten up your stops, because historically it's made a huge move. It's time for you to cash in. A lot of people buy at the top, sell at the bottom. CTA-Timer Pro teaches you what to do on the fly as it looks at the machine positioning. All right, let's go to the charts here let's look at gold. And here we have gold futures, and we're going to zoom out to the 5-year chart because I want to see, there's this top, here's the second one, double, there's your double top, there's your triple top. Now think of it again, the army is racing against here and they run into a wall and get rejected. The army comes back with fewer soldiers. And how do you know? Because if you zoom in on this, what do you see up here is you see a chunk of volume at that position. What do you see at this position here? Less volume. The army is weaker. What do you see up here? Even fewer soldiers are on the attack. And that's how you know it's likely to be a reversal. When it gets to this point and its break starts to break down, you see there is an initial thrust down onto this purple line, which is right around, let's say 1916, roughly about $1,000 an ounce. It can overshoot that. But look at the weekly chart here. Let's pull the 10-year weekly up. And what do you see? A move down to the 21-week moving average. It's telling you it's right around that point, about $1,000 an ounce drop, and you can see that coming here. So we're making the case this triple top is not the news you want, and we kind of look then to the dollar. We made the case that the dollar could be bullish here. A lot of people said no way, dollar keeps going to go down. You understand, we're in a global dollar shortage. There is a price level, people want to buy it, and that isn't the bull case for gold. Here we see momentum positive turning up on UUP. RSI's moved higher to 46. MACD's got a positive cross. Momentum Timer Pro's 4 consecutive daily buy signals. It's on the game. We know CTA-Timer Pro went from max short across the board. So if you were just looking at this report and you saw this minus 100s, you would have seen it. Because this doesn't move a lot of much, we're not looking at this from a position of trading. We're looking at this from what's going on in the rest of the market. And here we have UUP. Let's look at the dollar here. Let's zoom in to the 2-year window. What do we see? A bottom here right around 101, another bottom, bull case. This moves up to the 50-day moving average or even the 100-day moving average. But right now you're seeing buyers at this 101 level, and that should be taken seriously and kind of again as a negative for a move higher in gold. And with that, thanks for being fans. Thanks for watching. I'm Steve Van Meter. Bye now.